The commodities market can be difficult to enter as a beginner. That's why in this video we'll cover everything you need to know to get started trading commodities. First, let's start with the basics. What are commodities and what is commodity trading? Commodities are raw materials or primary agricultural products that can be sold, such as gold, silver, wheat, or corn. Commodity trading is the buying and selling of these raw materials, either in physical or virtual form. Commodities are split into three categories. The first one is metals, such as gold, silver, copper, etc. The second category are agricultural products, so those are going to include your coffee, your wheat, your corn, or your cocoa. And the third one are energy, so that's going to be oil, coal, or natural gas. When it comes to choosing which commodity to trade, there are a few factors that you should consider. First, you want to consider the volatility of the commodity. Some commodities, like gold for example, are known for their stability, while others, such as crude oil, can be quite volatile. You'll also want to consider the supply and demand factors that affect the price of a given commodity. For example, if there is a global shortage of a certain commodity, the price is most likely going to rise. And finally, you'll want to consider your own interests and expertise. If you're interested in agriculture, perhaps you can consider trading corn, wheat, or soybeans. Overall, it's important that you do your research before you get started and choose a commodity that suits you the best. Consider your risk tolerance, trading goals, and personal interests. The commodities market is known for experiencing powerful trends that can last months or even years. That is because commodities prices are affected by a plethora of external factors, such as the weather, geopolitical events, or the crop's harvests. For example, a severe drought in a major agricultural region can lead to a shortage of a given crop, consequently increasing its price. Similarly, an increased demand for oil from emerging economies can drive the demand for oil and therefore increase the profits of oil companies. As a commodity trader, it's important that you're aware and that you implement these trends into your trading strategy. By doing so, you can make informed decisions on when to buy and sell a given commodity based on its supply and demand. However, it's important to note that while strong trends can lead to significant profits, they can also pose some significant risks. Fundamental analysis is an important part of commodity trading. This type of analysis involves looking at the underlying economical factors that drive the price of a given commodity. For example, if you're trading gold, you'll want to look at interest rates and geopolitical events, which can often drive a higher demand for gold. If you're trading oil, you'll want to consider factors such as the global oil supply, the current geopolitical situation in oil-rich regions, and the demand for oil from emerging economies. By incorporating fundamental analysis into your trading strategy, you can make much more informed decisions on when to buy and sell a given commodity. This can help you avoid costly mistakes and increase your chances of success when trading commodities. However, it's important to note that fundamental analysis is not a foolproof method of predicting commodity prices. The market can be unpredictable, and sudden or unexpected events can fluctuate the price quite drastically. That's why it's important to also incorporate technical analysis and good risk management into your trading strategy. Seasonality is another very important factor to consider when trading commodities. Many commodities have distinct seasonal cycles, which can be influenced by factors like weather, the consumer demand, and the crop cycles. For example, agricultural commodities like corn and soybeans will have seasonal price patterns based on the planting and harvesting cycles. Energy commodities like natural gas will be affected by weather, often in patterns, increasing the demand for them in colder months. By incorporating seasonal patterns into your trading strategy, you can make much more informed decisions on when to buy and sell a given commodity. This can help you to take advantage of the predictable price movements, and it can increase your chances of profitability. It's also important to understand the correlation between the United States dollar and commodity prices. This is because many commodities are priced in US dollars, and therefore the fluctuations of the value of the US dollar can affect the price of the commodities. In general, when the US dollar strengthens, commodity prices tend to fall, and when the US dollar gets weaker, the commodities get more expensive. This is because a stronger dollar makes the commodities more expensive for people buying them in other currencies, therefore decreasing demand demand and pushing the prices down. Conversely, a weaker dollar makes the commodities more affordable, with people buying them with different currencies, and therefore it puts upwards pressure on the price. Commodity trading can be an exciting and lucrative asset class for traders. By understanding the basics of commodity trading, implementing seasonal cycles into your strategy, understanding fundamental analysis and the correlation with the US dollar, while also using a good risk management strategy, you too can become a successful commodity trader. Remember, successful trading requires discipline and the ability to adapt to changing market conditions. It's important to start small, focus on a specific commodity, and build your skill set over time. Thank you for watching this video. I hope you've learned something. If you liked the video, don't forget to like it, share it, subscribe, and if you want to get in touch with us, feel free to message us at info@luxtrainingfirm.com or reach out to our 24/7 live chat. And if you want to become a part of our community, join our Discord channel. Once again, thank you for watching, and I'll see you in the next one.